If you hired your kids in 2025, this video is very important because I'm seeing something happen right now that could cost parents money later. A lot of business owners correctly hired their minor children this year. Good job. But they are forgetting the next step. And today I'm going to explain why this strategy works, who qualifies to use it, why you must file your child's tax return, and what you should do right now before it becomes a problem. Stay with me. If you are new here, my name is Noura Masri and I'm a tax accountant and a founder of Noura's Books. I help business owners stop overpaying in taxes. And today we are talking about one of my favorite legal tax strategies, hiring your minor kids. Let's quickly review the strategy. If you own a business, specifically a sole proprietorship or an LLC, you can hire your minor children to work in your business. This is not a loophole. This is allowed under tax law. Here's why it works. You pay your child a reasonable wages for real work they do. That wage become a business deduction for you. Your child reports that income on their own tax return. Now, here's the powerful part. Because of the federal standard deduction, your child can earn up to the federal standard deduction amount and pay zero federal income tax. For 2025, since we're filing for 2025 right now, the federal standard deduction for a single filer was $15,750. So if your child earned less than that in wages, they owe no federal income tax. You shifted income from your high tax bracket to your child's zero tax bracket. That's legal income shifting within a family. And this is where parents are missing it. You still have to file their tax return. It also has to be a W-2. Do not do 1099. The game is different there. Not everyone can do this. This strategy works when the business is owned by the parents. The child is a minor. The child is doing legit age-appropriate work. The pay is reasonable for the work performed. This is a parent-to-minor child strategy. We're not doing a child labor here. If you already implemented this strategy in 2025, good job. Now, let's talk about what you need to do next. There are two major reasons. Reason one, state standard deduction could be lower than federal. Many parents assume my child did not owe federal taxes, so we don't need to file. That's not always true. States are different. Let's use Illinois as an example. Illinois does not follow the federal standard deduction system the same way. Illinois has an exemption amount much lower than the federal standard deduction. It is $2,850 for 2025. That means your child might owe a few $100s to the state, even though they owe zero to the IRS. But that's still a good strategy. If you don't file your child taxes, penalties and interest can start adding up on the state level. And many parents do not realize this until years later. So even if federal is zero, state might not be. Reason two, the statute of limitation. This one is even more important. Let me explain. The IRS has a certain number of years to audit a return. That countdown is called the statute of limitation. For most tax returns, the IRS generally has 3 years to audit. But here's the key. The clock does not start until you file the return. If you never file your child's return, the clock never starts. That means the IRS could technically question that year many years later. When you file the return, you start the timer. And after that time passes, that year is generally closed. That's why even if you owe zero on federal taxes, filing matters. If you hired your child in 2025, here's what you should do. Make sure payroll was processed correctly. Issue the proper wage statement. Prepare and file your child's federal tax return. Check your state filing requirements. Pay any small state balance if necessary. Keep documentation of the work performed. Don't ignore this step thinking, they didn't make enough. So it doesn't matter. It does matter. This strategy is powerful, but only when implemented correctly. Hiring your kids is one of the smartest way to reduce your tax bill income. Teach your child financial responsibility, shift income legally within your household. Potentially, fund a Roth IRA account for your child and build generational wealth, but tax strategy without compliance creates risk. And I don't want that for you. If this video was helpful, subscribe to my channel now. My name is Noura Al-Masri. I help thriving entrepreneurs stop overpaying on taxes. See you next Monday.